we're going to talk about performing specific procedures to obtain evidence. And we're looking at the transaction cycles, and we're auditing revenue. Okay, whenever you're performing specific procedures to obtain evidence, you got to keep in mind the ARC's mnemonic: segregation of duties, keeping separated, authorization from record keeping from custody, authorization, let's say for sales orders and credit authorizations, record keeping has to be separated from that, and custody, custody of the cash, custody of the inventory, custody of the warehouse goods, and shipping goods. Now, when it comes to revenue, there's a risk of overstatement. Management may be pressured to overstate revenues to meet targets, improve balance sheet ratios. Management may record fictitious sales, which is they may hold open the sales journal into the next year. That's touching the cutoff assertion. They may ship goods not ordered, which will be returned the next year. Improper revenue recognition, that's called bill and hold. All this is improper revenue recognition, and we have to perform substantive procedures in the revenue cycle, specifically to areas of accounts receivable and sales. And here's a flow chart. When cash comes in, you got to make cash receipts, receipt of the cash. 3 copies, okay? The actual cash is coming into the mailroom. The actual check goes to the cashier for a bank deposit. One copy goes to the accounts receivable department for record keeping. Another copy goes to accounting. Internal controls for cash receipts. When cash is received from customers, you got to put in certain controls. Okay, like we said, 1 copy of the cash goes to the accounts receivable department. Why? The accounts receivable department billed for this cash. The cash received should match the invoice. The actual cash goes to the cashier to prepare for bank deposit. Another receipt goes to the accounting department, which enters the receipts into the accounts receivable control account and is responsible for matching the bank deposit to the information on the remittance advice. Auditing accounts receivable. We should keep in mind the following assertions: completeness. You should take the age trial balance and compare it to the general ledger. Valuation, allocation, and accuracy. Valuation pertains to the allowance. Is the allowance for doubtful accounts, is it adequate? Okay, that's a big area. Existence and occurrence. Do these accounts receivable exist? You have to send out AR confirmations to the customers to confirm that the accounts receivable accounts actually exist. Rights and obligations. Does the client have the rights to these accounts receivable? They should review bank confirmations. They should inquire of the board minutes for evidence that the accounts receivable have not been factored or sold. So we're talking revenue. We got to look at accounts receivable, and we got to look at sales. We got to look at cash received, accounts receivable, and sales. Okay, you got to look at completeness. Take a sample of shipping docs and see if they made their way into the sales journal. And when it comes to sales, you got to look at cutoff. You should compare a sample of sales invoices before the end of the year and after the end of the year with shipment dates. So the sales invoices should match the shipping dates. Okay, valuation. Valuation, you should compare prices and terms on the samples of sales invoices with authorized price lists and terms of trade. So are these sales amounts appropriate for the company? Existence and occurrence. Do these sales exist? You should take a sample of sales transactions and from the sales journal and back into the sales order, the purchase or sales order, and to the shipping docs and to the sales invoice that was used for billing. All those documents need a match. Understandability. The sales invoices should be properly classified into appropriate accounts. Now, I use a mnemonic for revenue cycle. Revenue, you got to look at 2 areas: cash receipts, AR, and sales. Rev cars. Revenue cycle, rev cars. Revenue, cash receipts, AR, and sales. And when it comes to cash receipts, remember there are 3 copies of the cash received. It goes to 3 places, and I use a mnemonic. AR dad has the cash. What's the AR dad? AR. It goes to AR. It goes to the deposit in the bank, and it goes to the accounting department. So the cash receipts AR dat has the cash. The cash receipt copies go to AR, deposit in the bank, accounting department. And when it comes to sales, you got to match or vouch 3 documents in the billing department in order to make sales possible. So you got, what are those 3 documents? Purchase sales order, got to match with the shipping docs, and it's got to match with the sales invoice that was used for billing. Make sales possible. Purchase sales order, POS, PO, shipping, S for shipping, and sales invoice billing, SIB, sales invoice billing. Match those 3 documents and you have sales.